just want to say thank you for everyone for joining our webinar. We are excited to have over 100 participants joining us to learn more about Endeavor. I'm Adrienne McCants, Chief Strategy Officer here. Prior to joining Endeavor, I helped build and manage portfolios for high net worth families at Hall Capital Partners, a $30 billion registered investment advisor. But 4 years ago, I met Michael Simon, and I fell in love with his vision for a wealth management firm that focused solely on solving one problem: helping clients live their best life. Our mission is to help every client optimize their wealth in pursuit of their best life. And we think about that in two different ways. One is by helping people think about what's possible with their wealth. And two, helping people structure a portfolio that would make those outcomes more likely. Today, we'll focus on how we do that. Michael Simon, our CEO and founder, will talk about why Endeavor was founded. Roni Israelov, our Chief Investment Officer, will talk about how we apply intelligent investment strategies. And Brad Austin, a fiduciary advisor here at Endeavor, will give an example of how these types of improvements can make an enormous difference in someone's life and the life of their family. And then we'll end with a Q&A section. So at any time, please feel free to submit questions and we'll answer them at the end. Here are a few very important things to know. One is that we are a fiduciary investment advisor. Being a fiduciary is very important to us, and we take the responsibility seriously. The other is that although we continually strive for tax-efficient portfolios and we work with our clients' tax accountants, we are not a tax accountant ourselves, and so we do not provide tax advice. When I first met Mike those years ago, I was struck by this vision for a wealth management firm that took the best of technological advances and created really personalized investment strategies to do what's right by clients. As we've built Endeavor, that vision continues to be our North Star. Mike previously founded and was CEO of two companies, Uproar and LogMeIn. He served on the board of Session M and HubSpot. And as our founder and CEO, he relentlessly advocates for improving client experiences and, most importantly, client outcomes. I'll hand the floor over to him to talk a little bit more about why he decided to found Endeavor.
Thank you, Adrienne. And I'd like to add my welcome to those of you participating in this webinar. As a veteran of the innovation economy, I saw many industries and services transformed by technology, and I directly participated in the transformation of some of those. And along the way, my coworkers, my fellow entrepreneurs, and others, we had a lot of exposure to the wealth management industry. I was always surprised that the industry seemed to be stuck in its way. Why wasn't wealth management getting better and more personalized like so many other services? So I went out and I looked for a better solution. I was trying to find a wealth management service that provided personalized portfolios, detailed analysis capabilities, and simple to use apps. And when I couldn't find that type of company, I joined with Roni, Adrienne, Brad, and dozens of other smart folks to build a new wealth management company that was like the one we wished existed. So we started out with a vision to create a company that delivered convenient and elegant experiences, one that included fiduciary advisors, but that were backed by state-of-the-art technology to answer questions and explore opportunities, and one that created hyper-personalized portfolios optimized for each client's unique requirements and goals. Today, I believe Endeavor is the only wealth management company that delivers on that vision. In simple terms, we try to do two things for our clients: reduce anxiety and expand financial possibilities. And it turns out anxiety is really important. A recent study found that roughly 4 in 5 people are worried they won't be able to afford their lifestyle, their current lifestyle in retirement. And that anxiety comes from the fact they have unanswered questions, lots of questions. These can be really difficult to answer due to inflation, tax code complexity, and investment uncertainty. And even with access to planners, accountants, and unlimited spreadsheets, these are still challenging questions to answer. So at Endeavor, we invested quite heavily in R&D and continue to invest this day. We're creating technology and investment algorithms designed to deliver unique insights and reduce the stress of our clients. And we focus on a few things: making this complex simple, making the possible even more likely, and giving all of our clients access to intelligent investment strategies. Our overarching vision was to develop a platform that allowed every client to have a great relationship with a trusted advisor, to deliver elegant experiences with digital-first convenience, and to create remarkable portfolios designed to expand the financial possibilities of our clients. So what have we built to help help our clients achieve better outcomes? Well, we recruited a team of fiduciary advisors with advanced technology, and that gives our clients the advantage of the best of both. We've made the process easier and more insightful, and we've improved portfolio construction to include intelligent investment strategies. And we've focused on efficiency by reducing fees and increasing tax efficiency. And we hyper-personalize portfolios for each client's unique inflation-adjusted after-tax cash flow requirements, plus their security and growth goals. Now, we call these portfolios plan-optimized portfolios. So the Endeavor platform integrates planning, forecasting, analysis, portfolio construction, and even portfolio management so that the portfolios we recommend and build for our clients feature a custom combination of our intelligent investment strategies and a custom asset allocation designed for each client's specific needs. And you'll see in this webinar that the whole process can be completed in minutes, which is really unheard of in this industry. We think the process and the experience is delightful, but perhaps more importantly, the fact that it can be done in minutes means that you or your advisor can update and change your plans at any time, and can also evaluate the potential impact of changing plans. Once you change your plans, your plan-optimized portfolio will change too. And so we've mentioned a few times intelligent investment strategies. They're a critical part of plan-optimized portfolios. To tell you more about those strategies and our investment philosophy, Roni Israelov, our President and Chief Investment Officer, will speak next.
Thanks, Mike. I think that'll be really helpful, and I'm looking forward to later on when we can see how these plan-optimized portfolios really make an enormous impact on client outcomes and portfolio longevity. I'd like to give a little bit more color on Roni Israelov, our Chief Investment Officer. He came over from AQR, Applied Quantitative Research, one of the leading quantitative investment firms with over 150 billion in assets. He was a principal at AQR, where his responsibilities included building and overseeing options-oriented strategies and overseeing the portfolio implementation of equity strategies. He's well known in the quant space for thought-provoking research. Many of you may have already read some of his papers. He's frequently quoted in Bloomberg, Wall Street Journal, Financial Times, the list goes on. So I'll hand the floor over to him to talk a little bit more about how he's leading the charge on personalized portfolio management.
Great. Thank you, Adrian. That was a very kind introduction. And thank all of you for joining us today. We really do appreciate you spending the hour with us. Now, many people ask me, why did I leave a large established asset manager, AQR, to join Endeavor? And the answer is, I felt I could have a bigger impact helping underserved investors. And that may sound funny that you are being underserved, given how many wealth managers are competing for your business. But when you can compare, as I could, what retail investors have access to versus what institutional investors have access to, it's actually pretty clear that retail investors have been underserved. I was and continue to be convinced that technology-enabled wealth and asset management in the hands of fiduciary advisors will go a long way in remedying that. So similar to the personas that are illustrated on this slide, all of you have diverse goals with different risk and growth considerations. Whether you're looking to secure your retirement, leave a legacy, or maximize your net worth. It is intuitive that there is not a single universal portfolio or strategy that is a best fit for all of you. And that in and of itself is not a novel idea. If you look at public and private pensions, insurance companies, endowments and foundations, they all have very different portfolios that are designed to align with their unique objectives. But we have not yet seen that same level of personalization offered to retail investors. And it makes sense. The economics are very different when you are managing a multi-billion-dollar portfolio versus managing thousands of smaller portfolios. There's a need for a cost-effective, scalable solution for individuals and families, which is why we primarily see mutual funds and ETFs. But Endeavor is changing that. We've invested in research and development to bring hyper-personalization to you. We've systematized the customization of intelligent investment strategies that target growth and risk mitigation. And we combine and tailor these strategies for each of your unique portfolio requirements. In a moment, Brad will demonstrate how easy and convenient it is to do so. So I hope it's clear we are not a typical wealth management firm. And in order to build and manage hyper-personalized portfolios, we assembled an accomplished research team, which is made up of PhDs and Masters of Science in Computational Finance. This team is similar to what you would find at an elite hedge fund or a large quantitative institutional asset manager. We are thought leaders whose investment research has been published in leading industry journals. And we are taking sophisticated strategies that have been used for decades and enhancing them so that they can be personalized and managed in a scalable, cost-effective manner. Now, I'd like to provide 3 examples of the strategies that we offer. And to be clear, we offer more than these 3 strategies, but in the interest of time, I'll focus on these. So as you can imagine, equities are a foundational asset class for growth portfolios. And we have built Endeavor Personalized Indexing with a goal of delivering more than passive ETFs and expensive mutual funds. The strategy purchases around 150 to 250 stocks in each client's separately managed account. And that is important. Each client's portfolio can and generally has unique stock holdings which reflect their individual preferences. We see 3 primary benefits to constructing individual portfolios of stocks for each client. The first is tax efficiency. We've implemented automated tax loss harvesting, and our research shows that when you harvest losses on a portfolio of individual stocks, that provides about triple the expected benefits versus harvesting on ETFs alone. We expect automated tax loss harvesting to enhance after-tax returns by as much as 80 basis points per year. The second benefit is enhanced growth potential. We rank stocks across multiple characteristics that have a historical track record of enhancing returns. We apply factors such as momentum, value, quality, and low volatility. Our algorithm is designed to avoid stocks that rank poorly on these characteristics and favor those stocks that rank well. And we recommend these factors because we expect them to enhance returns by about 120 basis points a year while reducing overall portfolio volatility. The third benefit is socially responsible investing. With Endeavor Personalized Indexing, you can exclude stocks from your portfolio if they do not align with your values, while continuing to get the benefits of automated tax loss harvesting and factor tilts. We believe that you should not have to materially compromise portfolio performance in order to invest your values. So wealth is often used in service of future cash flow goals, whether those goals are for retirement or for education. The Endeavor Lifestyle Protection Strategy is designed to protect those future cash flows while allowing you to simultaneously pursue growth. When you establish your financial plan, you specify how much money you need to withdraw and when. And then Endeavor gives you options and a recommendation on how much initial protection you want. But ultimately, this is your decision. If it's an important near-term goal, you might want to protect 100% of those cash flows. On the other hand, if it's a longer-term goal, You may want to protect less so that you can invest more of your wealth for growth. Endeavor then builds and manages a portfolio of treasury bills, notes, and bonds in order to protect your future cash flows at the level you specified by immunizing them against changes in interest rates. There are three important features for the lifestyle protection strategy. The first is that each treasury portfolio is unique and tailored to your own plan. This is why integrating portfolio construction with planning is crucial. The second benefit is that the protection is dynamic. Every time we rebalance the portfolio, we look for opportunities to monetize growth in order to fund additional protection by applying a one-way ratchet. We first establish the initial protection that's specified, and over time, the goal is to grow that floor. The third benefit is that unlike fixed-term annuities, the strategy holds liquid treasury securities, which can easily be liquidated if your plans happen to change. Finally, I'd like to point out that lifestyle protection is integrated with your growth strategy so that it allows you to balance cash flow risk mitigation with your overall growth objectives. We have seen that many investors recognize that they have too much cash on the sidelines. They'd like to be invested, and they know they probably should be invested, but they're concerned about market uncertainty. These are investors who want some growth, but they also seek capital preservation. We've constructed Endeavor Hedged Equity to provide a path for people to get invested while mitigating downside risk. We believe this strategy has an attractive risk and reward profile relative to the hedged or buffered ETFs and mutual funds that are currently available. The strategy is implemented using S&P 500 index options and US Treasury bills, and it has three important features. The first is that the strategy provides uncapped upside potential beyond a threshold. That threshold is typically in the range of 2 to 8% over the course of a quarter, and it currently sits at just under 5%. The second important feature is that the strategy provides downside protection. By construction, quarterly losses are limited to 15%, and you don't begin participating in equity losses until the S&P 500 price index is down by more than 5% over the course of a quarter. And the final feature is that the strategy earns income from its US Treasury bills. The current strategy annualized yield is about 4.3%. So far, I've only scratched the surface on how we build hyper-personalized portfolios. And while I focused on three strategies, I want to emphasize that you don't select a single strategy. We combine and integrate multiple strategies in order to optimize your portfolio for your plan. So with that, I'm going to hand the mic back to Adrian, who will introduce Brad.
Thanks, Ronnie. I think it's really helpful to see these different types of portfolio strategies and the different ways that you can use them to create a really customized portfolio. One thing I've seen actually in talking to clients as an investment advisor is that I've seen a lot of portfolios that are based on hope. So I'm just going to put more money in and I'm going to save and I'm going to save and I'm going to save. And then one day my family will be okay. And Brad's going to show us how we can move beyond that to create a better chance of better outcomes. He'll show us how a personalized intentional tweaks can not only reduce risk, but also create increased growth opportunities. Brad was formerly a financial advisor at AllianceBernstein, where he spent 6 years. He's very knowledgeable and an incredible advocate for clients. I'll let Brad take it from here.
Thanks, Adrian. And thanks again to all of our attendees who have joined us today. So my goal today is to give a live demonstration of the Endeavor Portfolio Lab. And that's the powerful technology that Endeavor has built that our clients and our advisors alike use to build plan-optimized portfolios. And as an advisor, this is the technology that I use every single day that enables me to give personalized advice for our clients in pursuit of helping them make confident financial decisions and optimizing their portfolio around their goals. Before I get to the live introduction, which I'll share my screen and show that, a brief introduction to our advisory platform. So every Endeavor client has a dedicated financial advisor, and my job as a fiduciary financial advisor is to help our clients with investment and financial planning advice, as well as to be a dedicated client service and support resource for them. And the technology that Endeavor has built is a huge reason why, as an advisor, I chose to join Endeavor. It frees me from the burden of tasks like of day-to-day trading and portfolio management tasks, instead allowing me to prioritize my time, spending it with and listening to clients in order to help them achieve their goals. So without further ado, I'll share my screen to show the Endeavor Portfolio Lab. So our clients access the Portfolio Lab directly from our home screen, endeavor.com. And so this is it. This is the Endeavor Portfolio Lab. It also serves as our client portal where our clients see their portfolio performance and holdings and transaction details and all that good stuff. And it's also where they can access their advisor, contact their advisor, and book a meeting directly in their calendar. Down here is the interactive analysis tool that helps our clients explore life's possibilities and optimize a portfolio around their plans. And so today we're looking at a hypothetical client. Now, this hypothetical client we'll call Mr. and Mrs. Smith. And just to give you some background on the Smith family, let's just assume they're in their mid-50s, planning to work for another, call it 10 years or so, and they're going to retire, and then they're going to start spending from their portfolio. And in addition to transitioning to retirement, they're also going to plan to move from Boston down to Florida, and some associated expenses with that move. So we start by capturing the Smith family's portfolio setup. So the Smiths have about $3 million in investable assets, and then we capture their portfolio priorities. In their case, their number one priority is to meet cash flow requirements. In other words, secure their lifestyle spending throughout retirement and position their portfolio to provide specifically for those spending goals. Next, we capture what those spending goals are for the Smiths. So I mentioned that they are 10 years from retirement, and so they plan on adding to their portfolio on a monthly basis for the next 10 years. And then when they retire, as you can see here in 2033, they're going to start spending, call it $6,000 a month from their portfolio, adjusted with inflation. And this is highly customizable. So let's just say we wanted to get super granular here, and they planned on spending $6,040 instead. Very easy user experience to enter that, and a customizable inflation rate as well. And then when they move to Florida, they're going to put a down payment on a home in 2033. And then they have an associated mortgage payment. And you know what's moving to Florida without buying a boat. And so we've assumed that they're paying a boat payment as well. And we've assumed that this is a taxable portfolio for the Smiths here. And so we capture their tax profile because we know that after-tax results are what matters to our clients. And so we model the expected tax treatment of investment activity in their portfolio, and therefore the after-tax results of the forecast as well. So you can see we captured them moving from the Boston-based zip code down to Florida and the associated tax benefits they get with that move. And Roni did a great job at explaining the Endeavor Personalized Index portfolio. And with that personalized index, it's personalized, which means that we can get highly customized to our clients' unique circumstances or preferences to how we manage that portfolio. So one example of that is that we can add restrictions for stocks that our clients can't own or don't want to own in their portfolio. So let's just say, for example, Mrs. Smith, for example, is an insider at Intel. She's a senior executive, and so can't buy or sell Intel from her portfolio. Very conveniently adds that here. And let's say they prefer not to get caught up with GameStop meme stock trading, and so they just tell us not to buy GameStop. Very easy to input their preferences to how we manage their portfolio there. We also have a unique approach to socially responsible investing. We allow for our clients to invest alongside their values and whatever that means to them. And so, for example, let's just say that the Smiths here prefer not to invest in tobacco producers or the stocks associated with those companies. And so they've chosen to restrict those producers from their portfolio. As you can see here, that means Philip Morris and Altria will never be bought in their portfolio. It excludes those companies from their investment universe, the Smiths investment universe, I mean. And so you can see that that means that we're excluding their market value of Philip Morris and Altria from the investment universe. And we inform our clients in terms of what that means for the investment universe of their Endeavor Personalized Index portfolio. Roni also mentioned some of the styles of investment that we use in this portfolio to add after-tax and additional investment return. And so as you can see, we convey that we tax loss harvest in portfolios, and the rest of these are the quantitative factor overlays that Roni mentioned in his remarks as well. And lastly, our clients can choose between global equity diversification or US stocks only in their portfolio. And so we continue through to the optimization. And so this process is computationally very intensive. We are relying on thousands of servers to run forecasts of the good, average, and ugly potential market outcomes. And we show as a result what that means for the Smith family's retirement. At the same time, we are completely customizing a portfolio to the specific plan and requirements that the Smiths have outlined here. So, we're modeling the different tax changes that they have. There's over 18,000 tax jurisdictions in the US. And so we're modeling the combination of potential tax jurisdictions and showing what combination of asset classes or assets might do the best job at achieving the Smith family goals. So these are the Smith family's results. So what are we looking at here? On the left-hand side, we're showing a traditional 60-40 portfolio. So 60% global equities and 40% bonds. On the right-hand side, we're showing a 100% global stock portfolio. And we choose these two portfolio allocations for comparison because they're often the most common portfolios that we see clients or potential clients hold outside of Endeavor. In the middle is a Smith family's plan optimized portfolio. So as you can see here, we're pairing a growth strategy with a lifestyle protection strategy. And what we're showing here is that we are protecting 75% of the Smith's planned withdrawals that we accounted for earlier in the lab with a customized bond portfolio that's specifically and uniquely designed for the Smith family here. Next, we convey three key metrics that help the Smiths make key financial decisions for their financial future and the way that they'll invest their portfolio. So first, we convey median ending value. Now, this is our expectation and the median result of our forecasts of what the Smith family's portfolio value will be. And as a reminder, that's after accounting for planned withdrawals from their portfolio, as well as taxes paid by the portfolio and fees. 2 lines down from there, we convey plan security score. Now, what does that mean? Plan security score is our metric for our expectation for the likelihood that the Smith's planned withdrawals will be met over this time horizon. And so a score of 99 or above is absolutely outstanding. A score above 90 is very comfortable, and a score below 80 is one where we encourage clients to evaluate alternative strategies, either on the investment side or just the financial planning side. Lastly, here we convey typical max drawdown. Now, this is a measurement of risk. This is conveying to the client of what we expect the portfolio's maximum amount of stress that it's going to endure over the next 40 years. In other words, from a portfolio's highest point to its lowest point, what do we expect the portfolio to draw down by at some point over the next 40 years? So in this case, that's about 25%. And you can compare that to these two portfolios on the left and right-hand sides just to see the trade-offs and decisions. So our expectation is that this portfolio that's been optimized for the Smith family here, it has an improvement on typical max drawdown compared to both comparisons here. A significant improvement on plan security score, primarily a function of improved growth, as well as pairing that with customized security for the client's cash flows here. And as a reminder, we're looking at a client whose main priority is meeting their cash flow requirements. But this is really customized to whatever our client's priorities are. And so to illustrate that point, we can evaluate the trade-off if instead, let's just say the Smith's priority was long-term growth, meaning that they weren't so concerned about meeting their cash flow requirements and instead wanted to provide growth in their portfolio, perhaps to leave to the next generation or some other external circumstance. So as you can see, that completely changes the optimized portfolio here. Instead of building a lifestyle protection portfolio that secures 75% of the Smith's planned withdrawals, we're not protecting any of those withdrawals and instead prioritizing growth, just like the client is conveying to us as their priority. So you can see the massive pickup in median expected ending value. The plan security score takes a light dip because we are not specifically building a bond portfolio to secure their planned withdrawals, and the max drawdown increases slightly as well. Some clients have a preference towards both of these goals. And so let's look at a client who has meeting cash flow requirements as their primary priority, and then long-term growth as a secondary priority as well. That's customized as well. And so as you can see, this is highly dynamic. And it's also why we pair our clients with a dedicated advisor as well to evaluate these trade-offs and the nuance amongst them. And so we convey a lot more detailed information in here as well that is at our clients' fingertips and at my fingertips as an advisor. And this is something that you can get started on today just after the webinar if you decide to. And so I'll stop sharing my screen and pass it back to Adrian to wrap up with some final remarks and with Q&A.
Thanks, Brad. Mike started this by talking about how, by using Endeavor, you can reduce anxiety. And I think what you showed is that with just a few clicks, you're able to get these real answers that can help you understand the trade-offs of what to do and, make these really meaningful difference for you and your family. Of course, we have other portfolios that can be more growth or stability oriented, but this is a good example of a really tailored approach. This concludes the bulk of our demo, but before we get to Q&A, I'd like to leave you with a couple of final thoughts. Endeavor is really built on 3 pillars. One is that fiduciary advisors can provide better answers if given better technology. 2 is that helping clients uncover what's possible will empower them and help them make better decisions. And 3 is that intelligent investment strategies based on an individual's unique cash flow, security, and growth needs should be available. And with that, we'll go ahead and answer some questions. Roni, the first question that I have for you is that, I think all of this looks really great, but there can be complexities with taxable accounts that already have embedded gains. Can you talk about how Endeavor handles portfolio changes with taxable accounts?
Yeah, thank you for that question, Adrian. So tax efficient transitions is an important part of the client onboarding process. Just like your plan optimized portfolio is personalized, as we've talked about, your existing portfolio is also unique. So you and your advisor will generate a transition plan in order to manage capital gains over the short term while harvesting any available losses. One of the benefits of Endeavor personalized indexing is that each US equity portfolio is custom, which provides us with even more control over the transition process in order to manage those capital gain realizations.
Thanks, Roni. And then Brad, the next question I have is for you, which is how often do I talk to an advisor as a client?
Great question. So we make ourselves available to meet with our clients as often as they would like, really. As I showed, we make our calendars available to clients to schedule meetings when they have something that's important to talk about. We also proactively reach out to clients. So they can reach us really by email, by phone call, by scheduling a meeting, and they can really expect to hear from us at a regular cadence to schedule meetings with them proactively if there's something we expect that to be important to talk about with them. And we also check in with them anytime their plans have changed as well. So clients can change their plans directly on the Endeavor Portfolio Lab. And when that's happening, we're heavily involved in that process as well.
Thanks, Brad. And then Mike, the question I have for you is somebody asked, what happens next? Like, what should I do?
Yeah, if you simply go forward one slide, if you could, with this QR code, you can actually go to endeavor.com and sign up for a meeting with one of our advisors. Or you can go to endeavor.com and sign up to access the Portfolio Lab for a self-guided use of the service. It's not just available for our clients, it's also available for people who are exploring options and are prospects and want to try it for themselves. So either whether you talk to advisor or explore the Endeavor Portfolio Lab, those things are available immediately.
Thanks, Mike. Brad, I have another question for you, which is, what are the portfolio minimums?
Sure. So we'll consider clients of any size, really, but we do set minimums for certain strategies. Just to give you a sense, a plan optimized portfolio, which is really a full-fledged relationship with Endeavor to help build out the strategy, has a minimum that might start at about $500,000. But our typical client is closer to about $2 million under Endeavor's management, which could be spread across multiple accounts or profiles. I'll also mention we do have a short-term US Treasury strategy as well as a cash alternative. That's our recommended alternative, basically to a high-yield savings account. Those treasuries currently yield just over 5.2%, And we can basically get clients started in that strategy for $50,000.
5.2%. Wow. And then Rody, the last question I have for you is how does Endeavor rebalance a portfolio? What's the process like?
Okay. Yeah. So we've talked about building these custom plan optimized portfolios, but managing and rebalancing those portfolios is also crucial. And we rebalance each client's portfolio on a monthly cadence. Now, when we rebalance portfolios, we start by looking at overall asset class allocations, such as the allocation to equities versus bonds. But we also look at within asset class holdings. So for example, I spoke quite a bit about personalized indexing. And with that strategy, every time we rebalance, we look for opportunities to harvest losses if automated tax loss harvesting has been selected, and also to buy and sell stocks whose rankings on the selected characteristics have materially changed. I'd like to point out that we have calibrated our rebalancing algorithms with an eye towards reduced turnover. So we aren't trading every small wiggle, which realizes unnecessary trading costs and potentially unnecessary capital gains realizations.
Thanks, Rody. Those are great points. With that, I'd like to thank everyone for joining us today. As Mike mentioned, you can log in and use the portfolio today by going onto the website, or you can sign up to speak to an advisor. So with that, have a good day, everyone.